Hey, welcome back to the channel. Just want to talk about the economy and a comment I heard the other day from one of the economic experts, um, that the 2008 financial crisis resembles nothing like the economy at the moment, because that was a small liquidity crisis that escalated into a large crisis. We have spent, whether my country or the globe, let's just on an average, the globe, the global economy has spent, since the 2008 financial crisis, and even what caused the 2008 financial crisis, was too much liquidity in the market. It always has to go somewhere. When they print too much money, when interest rates are too low for too long, you know, bubbles throughout history have always formed. It doesn't change. People keep making the same mistakes. And bubbles form, and then always it's this time is different. The fundamentals have never been stronger. We have some new technology that justifies this. It's always going to keep going up. House prices to the moon. These sorts of things. It's always the rhetoric, And then the cheap money goes away. The true state of the economy is exposed, and we have a bust. And it's always the same: the bigger the boom, the bigger the bust. But all I've seen for the last 15 years, or really the last 20 years, is these crises become so obvious. And none of this is financial advice. This is just my opinion. So if you want financial advice, go see someone for that. But throughout history, it's always been the same thing taking place, and this time is always different. Well, if we have pumped too much liquidity into the markets because we had lockdowns and shutdowns and all those sorts of things, and so we printed money and we had interest rates low, but the global economy had interest rates far too low for far too long, with far too much money printing, far too many countries participating in it, way before 2020. They were doing QE for years. And so if that's what we've done, and the result is a stock market that reached all-time record highs, interest rates that stayed at record lows for a long time, house prices surging, things like cryptocurrencies, going through the roof, all these sorts of things, if you really think about it, who really has lost money investing? Not many. I mean, there are people, but you could have bought just about any stock, just about anything, during the QE initiated boom. Any house, anything, and any crypto, and more than likely you would have made money, and substantial. People who bought Tesla, and it went up so much. People who bought Bitcoin, housing, so many things. Most things went up. Not many things were sad stories where everyone lost their money, and there's always going to be a few scams and badly run businesses, but the majority of things were people made money. So how was this all achieved? It was through excess liquidity and rampant speculation, which is always the same thing that causes these problems. It doesn't change. It's always the same. So that being said, how can we have people on look at this issue and say the difference between 2008 and now is that was a small liquidity crisis that escalated? Well, that's to me a poor analysis of the whole 2008 situation. But how can you look at this and say this is not going to be a liquidity crisis? we're withdrawing the liquidity and raising the rate of, the price of credit. House prices are falling. Stock market hasn't really, tanked or something, but if it does, if we have an actual stock market that falls off a cliff, if we have that kind of event, that could be what really kicks off a crash. The real estate market is already under siege with falling prices, and if they come out and raise interest rates again, I think it's on Tuesday in New Zealand, that's going to put a huge hammer in the nail in the coffin. It just depends. If it's a 2.5% rate hike, that's not much, but if it's 0.5% to 1%, which it's either going to probably be, I think, 0.5% to 0.75. But those are big numbers. Those are big numbers. And right now the banks, they just can't sell mortgages at. See, I think I'm sort of what do you call it? Calculating, I guess maybe might be the word, not quite the one I'm looking for, but surmising that the banks hold all this debt on real estate. They loaned out as much as they could loan at stupidly high prices. And if they really put interest rates where, they should be, because they're keeping them really, really, really low where they're losing money and stuff like that. Well, if they put the interest rates where they should be, where it's like, if you want a mortgage, it's 8%. That's the cheapest we can do is 8%. Anything else is higher than that. If it gets to that, prices will really fall. 8% is a number that we haven't seen for so long. And it could go 8, 9, who knows? It could come down, who knows? But if we do see that 8% number, then buyers are going to say, well, one, I'm earning money in the bank, just making interest, which is quite nice. So I can just leave, like if I've got $100,000 in the bank and making 10 grand a year in interest kind of thing, if it's at 8%, that's quite nice for them. But also, the buyers just won't be, the sellers won't be able to get the money that they want. Now, who owns all the debt? See, if interest rates keep going up, we're going to see layoffs, and we're going to see mortgagee sales. And if the banks own all the underwater mortgages where, okay, they repossess the house that they made a loan on in 2021 for $1 million, and they put it on the market and it gets $680,000 or something, that's a $420,000 loss, but they own thousands of these properties. So the banks have a big ability to drive the price of real estate down by actually, marking up the interest rates where they should be. And the banks also have a lot of power in by being, forthcoming with interest rate prices. They can actually put people out of their homes, right? And if the customer can't pay the mortgage, now it is actually the bank's problem. Now it's the bank's problem. What are they going to do with it? Because it's so many. So they probably have quite an incentive, I'm surmising, that they really, they can't really make any sales at 8% or 7.5%. So they've got to try and sell it under the cost for like at least a year and then try and hike it up like a teaser rate, which we all know what happened when that unraveled in the States. So that's not really a solution to a problem. That's they just don't know what else to do. And I could be wrong on that, but I'm starting to wonder because even the Reserve Bank has complained that the banks are not passing on the actual increases, and they're actually trying to still offer these rates that are just too low for what the market needs at the moment. So I see real estate, in my opinion, going down a lot further. We're seeing articles in the Mail that are saying, the agents are saying this is we've reached the low. Well, if we haven't reached the low, we'd be real close, and people are starting to come into these open homes, and if you don't want to buy now, you'll miss out. It's only a short window to get in. Well, I don't think that's true, because people, the hype, the FOMO of the market is gone. It's gone, and it can't afford FOMO at 7, 8, 9, 10% interest rates. So, yeah, we will see. A lot of people are still factoring in a cut. Well, as soon as the economy slows down, they'll be cutting interest rates. I don't think so. I think that they're waiting and hoping, but it's false hope. I think the reality is that, we're just not going to see sub 5% rates of interest. I mean, we could, but I just personally don't think we're going to see that for a very, very long time. So I'll wind this video up because I'm at the 10 or 11 minute mark. Please like and subscribe and comment. It really does motivate me to actually make more videos. It really helps out a lot. So I appreciate it if you do that. And, what do you think? Do you think that I have got this all wrong? Do you think interest rates are going to be on the way back up? How do we see... I looked at Jerome Powell from the Federal Reserve in America, and I have the hunch that he is not making independent decisions. I have a hunch he is being told, what to say. Because if he actually does, collapse the US economy, that owes over $30 trillion in debt to all these countries, and it's built on a foundation of QE. If he does collapse that economy, it could really jeopardize America's reserve currency status or anything. And when he talks, he looks like a very stressed man, and he looks like he doesn't quite know what to do or say. But when he said his last remark at his testimony, when he said, we don't have interest rate cuts priced in, and the way he said it was like that. It was, we don't have those priced in. Like, get that idea out of your head. So I don't know exactly what the final move is there, but I think there's still a lot of don't worry, they'll cut interest rates and everything will be great again. And I think this is false hope. So anyway, I'll wrap this one up. See you next one. Peace.